everybody, Brian here, quantlabs.net, 1 a.m., August 1st. Let's take a look at what's going on in the markets over the last last week or so with all the new deep analysis. So if you are sort of struggling in your performance this year, I mean, it's pretty tough. Just go over to quantlabs.net/ETF. Get signed up and learn more about what we're doing. This is all fairly brand new type of analysis. So let me show you what we're talking about. Alright, first I want to show you everything I'm looking at right now is on Interactive Brokers. So this is the latest analysis I've been getting on the currencies when it comes to the stronger US dollar. So what I always look for is this 1.7 Sharpe ratio of certain currencies. This is still decent, but it's not as strong as what I'm about to show you. And usually I like using Sharpe ratio. And the other thing I look for is max drawdown. You can see here's negative 48%. You don't want that to be more than 15%, to be truthful. And if that's not enough, this right here will help you in the monthly returns. These are usually the top three. So these months were not too bad for this particular set of currencies. But you can see here, very strong in April, negative, and then June 30%, and then this month, July, or I should say last month, July, 22%. So it's still pretty good, but it's still starting to weaken. One of the things we know on why that is, if you go to finance or Yahoo Finance, what you want to look for is the USD index, the DXY, and it was fairly good for the last, fairly strong for the last, I'd even say 5-6 months. Let's see here. DXY, I know I'm going to get this wrong because I don't usually look this up. Alright, maybe it's this what I need to do. This is typical of Yahoo Finance. Is this what it is? No, okay. Let me go over to Google and just do DXY and use a different source here. So yeah, Market Watch we could look at. So as I was saying, you can see here it's 105 down. Let's see, they have a 5-day on this site here. So you can see here 3 months strong, 1.94 year to date. Okay, so I got out at the right time just by sheer luck, where the US dollar has gone up about 10%, 3 month 1.9 and then 0.59. So you can clearly see it's weakening. So as a result, with this particular tear sheet and these so-called emerging markets or just weakening markets that are denominated in those countries in US dollar, the opportunity seems to be petering out because the US dollar is starting to weaken. So again, by luck, being able to develop the kind of script that I just developed late last week, being able to show you what I just created. So this is weakening. So the question is it worthwhile to continue trading like this? And I'm going to give you my answer. So here's a bunch of similar tear sheets, but they are across the board among many sectors that I've got access, and I've segregated them out into about 55. Right here, this page at quantlabs.net/ETF, this video, the video you'll get access to will exactly walk you through what I'm talking about, these categories. These are very important because when you listen to Bloomberg and whatnot, they always speak about this sector and that sector is performing and this one's dropping. So I kind of mimic the same kind of thing. But here, depending upon the ETFs, sometimes certain ones, like commodities, it could be anything. So in my case, we have energy. Again, just keep your eye out on the commodity here. So energy is obviously oil, natural gas. It also includes exploratory stock, infrastructure, stock, and that sort of thing. And look at this. Here's your max drawdown. Negative 0.49. Now, here's the thing. Right there. Okay? It may be starting to come back, or it may drop back. And what you're looking for are, what are your monthly returns? You see that big drop there in June of negative 30? So you got to ask yourself, is it worthwhile to put some money into this? Usually an optimizer that I've got will calculate using obviously past historical patterns, and then it will assess what you should expect in terms of as a equivalent expected Sharpe ratio over the next couple of months based upon the momentum of the historical of the last year moving into the next few months. So that's what we look at. So energy 1.35 is okay. It's stronger, not as strong as the 1.7 without those forex. Next one we have here is commodity. So this is like all commodities not in the specialized, which I'll show you. You can see here there's another big upswing here. So this upswing's a little better, 1.35. And one distinction between this and the other one is everything's mostly US based, but there are some that are international. Here's another one of this one right here. This is the surprise one. This is the new energy. This is the solar. This is the wind. And look at it. That's stronger now, 1.58. So you up until a point, the performance here is much better because let's face it, with the ESG thing going on, the environmental or social, I don't know what they call it, ESG. This falls under that. So it's starting to strengthen here, which is quite surprising. Again, let's look at the max drawdown. Where is it? Max drawdown, where are you? So that's fairly significant there too. Now again, we're always going to compare against the standard benchmark of the S&P, which is the yellow, but that's a strong performance. And the nice thing about this is not limited. This could continue to move up. Now, one thing I need to make sure you understand, as I said before, these are not long-only ETFs. There could be bearish or short ETFs in there as well. So you got to make sure that we don't think and assume it's just long. But whatever's in there, there's strong performance, which is good. Okay, and again, let's look at the monthly returns. So you can see here, July was very strong. Will it continue? I don't know, but it's quite possible this should continue with the more positive story because it's clean energy and that sort of thing. So here we're now moving into finance currency. This could involve a variety of different currencies worldwide. You can see here it's Sharpe ratio 2.24. So the currencies is what has been performing very well, whatever these contain. And you can see here again, negative July, not as strong in June, but it's always about the max drawdown as well. So here, max drawdown, negative 11%, negative 11%. So that's within the 15%. So this one's pretty safe without the crazy volatility. Let's see if I can separate this out. Yeah, okay, I just did that. We'll come to the ones I'm separating out. And we're just going to look at a few other ones. So here we have Treasury. And again, I said this in the last week's video, that some guy on Stansberry saying, oh, Treasury's the only place to go, only place to make money in, or at least stabilize your return. Listen, I've just shown you two different baskets, sectors, categories, whatever you call them, that is doing double this. But for Treasury, 1.7 is not too bad. The nice thing is that there is no volatility in this. So it's stable, but here's the problem. If you're looking for paltry returns, this is where you go. 0.41 best month, not even 0.5%, 0.25% in June, 0.18% in July. I mean, you gotta ask yourself, is it worthwhile holding that? U.S. crypto. Okay, this is international crypto, but more U.S. because it will contain ETFs that focus on mining and crypto itself. This does also include Grayscale, so that's an important factor. The nice thing you could do, I'll just give you one. Everything's negative in this mix. It's probably about 12. Most of it's either Bitcoin mining, and then there's a dedicated one for Ethereum. But this latest performance right here, that's Ethereum Classic. If you haven't seen the returns on that for last month, it was very strong, and that's why you can see it did outperform the S&P there. But look at this max drawdown. Negative, was it 80, 50? Hold on. Is that 88%? Wow, that's severe. That's high risk. I mean, when you look at the monthly returns, mostly negative, but a very strong month for July. Will that continue? I don't know. But from my perspective, with all these better performing sectors, categories, lower risk, this one comes to mind. You know, for currencies, negative 11, but yet you got a much higher Sharpe ratio. It doesn't take a genius to figure that out. As you can see here, that the Sharpe is negative 0.41. So not here to poo-poo crypto, but that's why I built this, is to get an idea at a very high level, to see is everything I can get access to via Interactive Brokers and what's available. And again, it's over 900 ETFs. It clearly shows that the crypto is something you don't want to get into unless you want to lose money. U.S. energy, so this is obviously specific to U.S. only. Again, that negative 44%. Sharpe ratio, I don't know if it's worthwhile to take that risk. But again, this is where you look at your monthly returns to see, yeah, you can see it's quite volatile in negative 30, what was that, negative 21. Not bad for July, stronger for May, but negative 21 for June. That's pretty volatile from one month to the next. Meanwhile, yet again, I can show you this one on the currency front. You know, low volatility, but yet only really very negative months. So you have to ask yourself who, what, when, where. Okay. Next one we have is the SPACs. I'm sure you've heard about these. 1.227 on the Sharpe. It's very volatile again. This was not as volatile, negative 25%. Again, just brutal. Good July, brutal, negative 21% for July. Again, if you hold these, you're going to get crucified, and that's where people under the financial advisors is happening, where their performance is not that great. Here's another one. This is S&P related. This one's 1.8 Sharpe ratio. Now, again, I got to remind you, these could include the short or bearish ETFs for, let's say, the S&P, right? So max drawdown 23%, and look at this, another bad month of June, and a slight negative of 1.3% for July, and negative 13% for July. So I'm not sure if I'd take that. That could be because of shorts, because the market has been getting stronger. And if that's the case, then there's the short and bearish ETFs, then you would start to see them go negative, and only the positive long and bullish ETFs would start to perform. Now, this is the one thing I got to be very careful on, is it's trying to find the sweet spot. How far back do you analyze? You've only analyzed, let's say, the last 6 months. You go back a year, you go back 3 months, and so on. All right, so here we've got another very super volatile tech. Sharp ratio here of that's very weak because you can just see these major downswings. 0.34 for the sharp. Max drawdown negative 30%. Monthly returns an okay June. Very negative for July. April was okay, but whatever. I mean, that's a little far back. So you get the idea what we're looking for here, right? So now we have utilities. This is a defensive. Okay, I can look at health. I can look at other defensive stocks like military or defense. They're not coming up because I watched the script generate all of the returns on all the ETFs. I'd say maybe 75% of them were negative. All the ETFs out there were all negative. That's including what's in health. That's also what's including in medical. So knowing that whatever's going on there, you don't want to be part of that. But utilities is not bad. This is actually pretty good. This is pretty expected. 0.65, it's not very strong. Within the 14% down, max drawdown, that's not bad. But it's not as strong. 6%, 7%. So out of that, you got to ask yourself, which ones would you go with? Let me just pull up the first one I looked at. Let's see here. Okay. Okay. So, right here, this one I want to show. So this is the very first one with a 4x. So it looks pretty good. 1.73, petering out. You can see that's pretty good for June, July. 30% return, 22% for July, and plus on top of that you got this one, which is the currency, so it's negative. So this is where you got to go, where do I put my money? I want to start laying this out in the next few days, and it's tough. It's very tough. I don't see metals, which would include gold. I put up a video on that, and I do believe I talked about the gold miners were shorting on gold price. So that's not a good sign because that's an expectation of gold prices to go down. So I could be wrong, of course. This is the early days of this type of analysis, but usually when I did it with the Oanda CFD, it was pretty dead on. For whatever reason, I didn't expect it. Like as an example, when I showed you the crypto, I didn't really pay a lot of attention on the crypto. Okay, I did see it spike up, and I couldn't understand why. So maybe 3-4 days before, I started to see. Where's my other one here? But I did start to see Ethereum go positive, and it was a huge return. I don't. If I could pull up that tear sheet, I'd gladly do that. If I can see what we have here. Anyways, it was a good return for July, but it was telling me Ethereum was going up before the actual price went up. So these, for whatever reason, you got to also remember, very important about ETFs. Reason I like ETFs is because you're getting a snapshot of what professional money is doing. So all that heavy lifting, all that hard analysis is actually being done within the ETF itself. What I'm doing here is I'm showing you basically the top of the top ETFs that are performing. the different sectors. And I will tell you that this seems to be pretty good and pretty accurate when things are about to move up or move down, like I said, with the gold as well. And the utilities, it looks okay, but I'll figure it out. But hopefully you get an idea of what I'm trying to do here. Now, as I said, just go over to ETFs, quantlabs.net, ETFs, quantlabs.net/ETF, brand new. I put in I don't know how long this video is, like 2 minutes, 3-minute video, and this will walk you through what I'm doing. On top of that, now, this is the important part to understand. If this works out, there's two things that I can promise you. Is this type of analysis is very valuable. Yeah, I'm not sure if this will load up. No, I can't remember the name of the URL. But I'll put that in the description if you're interested. But this type of service would be highly prized and valuable to hedge funds. Okay, they will pay a lot of money per month for this type of access. If this works out, I have already chosen my third-party verifier. It's called Trade Metia, I believe. Trade. Let's see here. Trade Metia. Trade Metria, I think it's called. Yeah, right here. So this website, they do they chronicle out of your exchange, out of your broker account. As I said here in another video, they have access to in real time interactive brokers who I'm using now. That's real time. That's right into the API, auto sync. So that I'm going to take a wild assumption on if it's like cointracking.info. You plug in your API access to this service, and every hour it will update the trading performance in this service. And the other thing is you get access to Kraken as well. So if I ever decide to go into Bitcoin, which I'm kind of like waffling now with the performance I've seen over the last week or two. But between those two, I can have it get tracked between both accounts, Interactive Brokers and Kraken. So what I'm saying is, as I said, if it works out, it can be very valuable to a hedge fund, and more importantly, for whoever, retail or I won't say institutional, but along the lines of that. And there's a positive track record, third-party verified through this company, Trade Metria. I hate to tell you, it would be very valuable. And the price it's at now, $47 will not last. If you want, get on the link now, get on that. It's permanently grandfathered. I still got people after 10 years paying the same rate that they did 10 years ago. So people do stick it out. And that's about it. If you want, got questions, comment, I'll get back to you. Or get on my email list again at quantlabs.net/ETF. Okay, right here, quantlabs.etf. All right, thanks for watching. Have a good day.